Our friends silver price and gold price have been getting clobbered. You likely want to know, when will this end? We're going to talk about exactly that in this video. Did you know that over the last week, like every Fed governor on the face of the earth came out and gave a speech that had a little bit of a hawkish tone to it? What does that mean? And should we even believe these guys anyway? What does this all mean for the silver price and gold price? When you're here in the basement, you are part of the club. I'm glad you're here. Please give this video a thumbs up, subscribe to the channel, that's free, and leave a comment in the comment section below. We're like the Mr. Rogers neighborhood for gold and silver enthusiasts. You ever wonder why this happens every month? The Federal Reserve, they roll out their clown show. They have their governors go out and give speeches, and it's hawkish, hawkish, hawkish. What does that do to the price of silver and gold? Well, it makes the US dollar go up in value, which makes the price of silver and the price of gold go down, down, down. But what did these guys say? We're going to take a look at what just 2 of the 12 said this week. Let's start with St. Louis. James Bullard. He told the Financial Times that he supports raising rates higher as insurance against inflation. Hawk, 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 squawk, squawk, squawk. Makes the dollar go up and the price of gold and silver go down. Now, Bullard's perhaps the most hawkish member of the FOMC. He told the newspaper he'd keep an open mind. Okay, well, that's good news. Going into the June 14th meeting. So that's D-Day for us gold and silver investors. But given that inflation has been slower to come down than expected, he's inclined to back another rate hike. Well, thanks a lot, James Bullard. I bet you've heard that saying, talk is cheap, and we need to bear that in mind as we hear what these Fed governors are saying. What did the Dallas Fed president, Lori Logan, have to say? She said that as of right now, a pause is not in order. That's hawkish, though that could change in the coming weeks depending on incoming data. So they're leaving themselves an escape hatch. Have you noticed that? That, oh, if the data's not so good, and what about that $17 trillion in consumer debt? What do you think about that? Do you think that's a good piece of data? Americans have more consumer debt right now than any other time in history, and we're dealing with interest rates on that consumer debt that are also at record highs. What do you think that means? Well, that means that consumers aren't going to have enough money to spend, especially on discretionary items. Does it make sense to you then that big companies like Home Depot are reporting sales decreases? And Lori's leaving herself a big escape hatch that could result in more dovish, more easy money policy coming from the Fed. That would be great for the silver price and gold price. I want you to listen to what she said here. After raising the target range for the federal funds rate at each of the last 10 FOMC meetings, we know that pain, pain, pain for silver and gold. We've made some progress, Logan said in a speech in San Antonio, Texas. The data in coming weeks could yet show that it's appropriate to skip a meeting. That's good news. She's putting on her little dove wings, right? As of today, though, we're not there yet. First Mining Gold is a development company advancing 2 of the largest gold projects in Canada. Springpole in Ontario and Duparquet, located in Quebec, each already has 5 million ounces of gold reserves, but exploration initiatives are underway at both projects to find even more gold. First Mining is well-financed, has 0 debt, and owns an interest in 4 additional Canadian gold development projects. And did you forget about the king clown, the head clown in the Fed clown show? That's right, this guy, Jerome Powell himself. We're going to let him out of the box later this week so he can deliver a speech, and the market will surely react to that as well. But there's 2 big elephants in the room that we need to consider. First and foremost, like we touched on earlier, talk is cheap. What's the Fed going to do when they get faced with a severely contracting recessionary economy? They're likely going to print money. They're likely going to loosen up with monetary policy, and that will be very good for the price of silver and gold. Now, look, I'll be the first to admit this has taken longer than even I anticipated. We had people saying this would occur almost a year ago, or at least 6 months ago. So we've been through some pain, but it's going to happen. Are we best served when we think for ourselves? What about this other big elephant in the room? Do you think maybe, just maybe, the Fed is a bunch of liars? Think about the 2008 financial crisis. They didn't see that coming. What about the tech bubble back in the year 2000? They didn't see that coming, right? What about the recent bout of inflation? Remember, there was going to be no inflation, according to the Fed, and then it was just temporary, according to the Fed, and then it was transitory, according to the Fed, and now it's the biggest problem in the world, according to the Fed. Why would we believe them? We have to think for ourselves. It's like people only want to look at the recent things the Fed says and forget about the fact that they've been lying to us for decades. Hey, when we tie it all together, when we look at everything going on right now, sure, the silver price and gold price, they've been through a lot. But look at the big picture of what's going on. These Fed governors, they can squawk and squawk all they like. But at the end of the day, they're going to have to react to a very difficult economic condition that we're moving into. And the only thing they know how to do with whatever smoke and mirror trick they may come up with, whatever they want to call it this time, is to dilute the currency, to decrease the value of the US dollar. In the long run, silver and gold win. Thanks for joining me. Watch another video, and I'll see you next time.